This is my freestyle. We're going to do this a little quick. Investing and trading in the financial markets impose substantial risk to where one can lose all or more than their initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. All right, we're going to get right into this one and try to move a little quick. Hopefully you have an understanding of my madness at hand. All right. Big winner of the week on a scale of ease to get into, to look ahead and see what would likely happen, and smallest drawdown out of everything that I have traded so far. And I wish I took a bigger position, but we will. Let's just let this verify itself. Nat Gas, if you don't recognize the chart. All right, Nat Gas on the QG. All right, the only difference on this chart, I ran into a big, let's just say a clusterfuck this week. Came to pretty much with the euro and which anchor to draw from. All right, euro, oil, commodities for the most part. All right, most commodities, currencies have been trading in this crazy range. So you're going to get these wild swings and a lot of head fakes. And pretty much it's like I said, the best word I use so far is clusterfuck. All right, so the Nat Gas has traded support this week. Originally, when Nat Gas, we had identified this somewhere around here. I believe that it was somewhere on this day right here. We had noticed this AHA trade setup. All right, it was the most recent AHA long setup, measured from April 2012 until the highs of July 2012. It was 1902s until the 3277. All right, you can find these anchors on your continuous contract. That's what gave us this major support. There's one more level down below, but that's it's even older level than that, going back into 1999. All right, what I mean by AHA trade, these were original setups that when we had traded these levels, the market deemed it important by pretty much making that a low. And the first move out of it, meaning that once it had made a move and bounced, that was your original anchor or your long setup, which had pretty much found support and eventually made measured moves away from that level. All right, so that's what AHA means. All right, and that's trademarked by someone else, David Horsley at eminiaddict.com. Anyways, all right, so once we identified on the euro, and I know as crazy as it may sound, but if you had noticed, I always use the euro for guidance on commodities, and pretty much anything else that relates to, let's say, dollar-denominated assets. All right, so I look to the euro only because it is a heavily participated futures contract and forex market that is compared to the E-minis, the S&P 500. You will see what I mean by participation. There's a lot of people that trade it or speculate on it, and you better believe they participate using these fib-based algorithms, or math, plain and simple. Anyways, we had identified this major support. I put out a Twitter or I forgot exactly what I did, but I told people to be aware of this level, that it's worth nibbling, not in the futures market, but at least in UNG, the ETF or whatever it is, that mirrors the performances. And at that time, I had no position. Actually, on this leg up, this leg from starting from the June of this year, I had no I did not participate in none of that. All right. Pretty much around here, we just started measuring. All right. If it started pulling back from this level, uh, we was waiting for pullbacks. And on this pullback, uh, I didn't nibble on that either because it did not trade. All right. And when you see something not trade, that is not necessarily bullish, but at the same time, you have to just recognize that long did not trade. All right, people are waiting for this level to trade so they can buy it and have a tight risk range, meaning that you're buying it, stop, right? And that level never traded, so it started to pull away from it, from that level. I believe it made a new high, all right? And this is something very characteristic about commodities. It likes to make a new high, dip into the high, and then pull back. So trap a bunch of people. Oh, it's the breakout. What's the breakout? And then get them. It'll make a new low, stop them out because they're putting their stop on a logical place underneath that low. And what did it do? It made a new low. It dipped in. A lot of people thought, nat gas is going down. It's going to trap a bunch of late sellers, and they used them as the battery pack to get the squeeze job done. Right? So far, this is holding. Right? And you have to apologize because even I was drawing from this anchor. But I know better than that, and I did hint and warn that it can be either or. So, like I said, and I'm going to say it again, you draw from both, and you keep a record of them. I know it looks messy, but this is the way, you get caught from, just getting caught right here. Pretty much you will shortchange yourself. You'll think that broke when it's really defending. And you just don't want to get caught out there because then that's a missed opportunity. That's pretty much what it is. This is your first target. This is still your line in the sand until this target trades. This line in the sand does not change. Right. So on the QG, your line in the sand is 2694. Right. I had to step away from the screens, or I was in and out. I couldn't pay attention to it. I didn't want to leave a limit out there only because I had bracket orders and I didn't want one getting triggered. So pretty much I had brought 282s. I brought the lows of this day, and then the next day I had brought the participation. And I stood underwater for these 2 days, and now we're looking pretty good. All right, so all that to say is not really much to say. First target 3006, and then higher targets up above. Remains to be seen, but let's see. Moving on, net gas in this chart. Just wanted to show you it in a different way. I posted this on Twitter. Think about that drawing looking like this. Monthly chart going back as far as Thinkorswim takes it, and pretty much this is what nat gas looks like. All right, and just not really trying to be funny. Pretty much, another way to think about it is as expanding wedge right here, and you will notice that action by you'll be breaking a whole bunch of shorts here, and then the longs will be in play, and then you just go, you go right to the top of the range, and all of a sudden, this is pretty much you go right, you trade one traditional, and then you go straight up in extensions. As soon as that extensions break, what you wind up doing, you're gonna come find support at probably an original anchor. All right, and it winds up starting. This is the building or the foundation of a expanding wedge. All right, so I'm just trying to put some mass perspective of how a chart pattern is drawn. Pretty much, you'll go to the top of a range, you'll fail when the algorithm just drops its position and completely flips and takes it right back to the other side of the range into an old familiar level that the buy side, or if the algorithm switches from buy to sell, it'll it'll flip its light switch. It'll go from buy to sell, buy to sell, and this is how you get an expanding wedge. It's exactly how this said. Longs break trend. Excuse me. It should be the opposite. Shorts break trend. Longs break trend. Shorts break trend. Longs break trend. It's just repeated, and it just keeps expanding. So the short has already broke here in some form or fashion from this pop in 2014. All right, 2000 was it 2013? No, it was 2014. All right, this pop created this short being broke. All right, so now we're just collecting sellers. All right, we're collecting sellers for don't know where it's gonna go. The only way we judge that is once we start having measure moves up into extensions and we drop it as soon as it breaks. We're not heroes. We're just following what the charts are saying. All right, so pretty much this is what I'm just saying. For people who think it can't happen, what will cause it to happen? I don't know. I don't watch TV. I don't read newspapers. I don't know. So this is what I do know. Has a lot to prove itself. I mean, you don't go and bet the house on it, but uh, this is something that I'm starting to build a small position in UNG. I'll probably look around for NatGas plays, but pretty much until this gets going, I'm really not looking. I'm not trying to play a role game in the futures market until it really gives you trend. Right? In my book, it's not worth it until it's ready. Right? But it's something to keep in mind on. Again, A+ setups. I'm not doing anything less but A+ setups. Bonds. Let's go right into it, please. Bonds. Daily chart. All right. We're anticipating. I'm not sure if you guys remember this, but when I was looking at this long ago, as the long, or not long ago, so it's not that long ago, but pretty much this rally that was fueled by Gap is now coming back and trading support. This never traded. It was a front run by a decent amount, and when you get those kind of things happening, and you go up into a next measured move, all right, this is still in a short right now, right, from this level, all right, from this level, traded down to target, move, next measured move, and you're trading it now with targets down at the 145.15. All right. How did we get that? And there was also another one. I think we got to go to a 15-minute for that. Yeah, okay. There's another one which I just put out on Twitter yesterday. I thought it was I didn't want to waste a video only because I felt it was important. I did not get this either. All right, I have orders sitting out at 6, starting at 6 and halfway through. Pretty much what I usually do is on trades that are pretty wide, right? What I would do is I would just measure halfway, and pretty much I'll I'll take I'll take the 50 exactly. I'll take 06s and I'll take halfway, and I'll just do 2 tiers. I'll get in that. All right, but I didn't even get that. All right. Whatever, it is what it is. So we'll see what happens. It probably has another, it's probably just still working up into it. We'll see. Right now it's just sloppy. It's fucking sloppy. We'll see. This implies that it's gonna trade into it. We'll see. I'm not this bonds. I really don't worry about the squiggles. I wait for the big levels to trade because it is slow, but it does pay when you get the setup. It pays. So yes, it's slow, but it's worth the wait because when the setups do trade, it's something you just want to be in. All right. This is bonds. Usually you get in at the end of the day after equities. You finish pretty much during the morning. You're trading the gap fill. In the gap fill, you're trading oil, currencies, gold. You name it. You usually trading dollar denominated assets. From there, usually after maybe 11:30, skip lunchtime, 1 o'clock, then you go into equities. In the equity space, then you're looking to do a fade trade on the currencies to sit overnight and or bonds. You're looking to pretty much do trade the bonds. Pretty much you leave it in bonds if it's trading a move, because then you'll leave your money in that side of the market. And then in the morning, usually pretty much by 9 o'clock, once the NYSE opens up, right before the gap fill, you're getting out of bonds and back into whatnot. It's pretty rotating money, right? So uh, I thought it was necessary to say that bonds had a nice trade. It was sell 0.6s, stop above 21s, and you're targeting 147.07. Right? If you do that, that's unbelievable. All right. It's $31.25 a tick. All right. And how many ticks? Let's see this real quick. Let's go on the 15-minute real quick. I don't use this chart. Oh, right here. Excuse me. It was from. It looks so funny. Yeah, here it is. Okay. All right. So the 156s. What does that take you? Down to the 147.7s. Let me just make sure that's right. Telling all these numbers in my head. Yeah, 147.7s. So let's measure that. It comes out to, let's just say if you took it from sixes down to sevens and you front ran target, you're getting paid how much? That's 92 ticks. 92. All right, so what can you do with that right there? All right, that's per contract. That's a nice payday if you ask me. Let's get rid of that because I don't need that. I can get rid of that here. All right, so let's go back to, I can't use the white chart. It's killing me. All right, yeah, so pretty much that's the trade. What happened here, we was measuring from these lows, thinking that this level support did trade. This is the importance of levels having to trade. You know, from here I was measuring. Remember how NatGas was drawing to here, and I told you it really needs to be here. All right, so this is the reason why I was drawing from these anchors, from these highs, and not these new ones. Excuse me. I was drawing to these highs, right? So pretty much it gave you a failure level here. So this is just warning me that this pullback is not holding. Buyers are not stepping in. So therefore, the short is still valid from up here still. We're still walking this short down. And no, I'm not. I have not shorted bonds. So I actually even try to get long up here, believe it or not. I actually got long here. I took it up. I booked profits, and then I tried to buy the dip, and that broke. So since then, I avoided it. I've been waiting for this level. Patient, right? And that's pretty much about it. That's where we at with bonds. So right now, shorts are still in play. What will confirm support is breaking the short. Right? So right now, nothing to do on bonds if you're not short. Wait for 150.06s and targets below. Right? However, bonds are still bullish until we break below 142.22s, which lead up to the 176s. All right, it's that. We did nat gas, we did that. Oil, real quick. I'm gonna go very quick. Right now, ES is ripping, and look, right up to the tick, I'm getting filled. But right up. All right, so I hope you're watching my other video. I did one separate for the ES. Let's get right going because this is the reason why I need to be quick. I'm going to do one more and then one special one. All right. Oil, stick with the major support. The phrase goes, buy low, sell high. Stop buying middle range, stop buying the top of the range. You're only buying support. Right. Major support, 57.52. Invalid below 56, roughly. I'm not giving you the exact, I'm just giving you just about. These anchors are drawn from the highs of the March 26th candle to the highs on May 6th, right? And I'll give you this major anchor from there. No, it looks like slop, but please bear with me. All right, let's get, let's see, I really need it so you can see it. Now let's get this real quick. All right. All right, if you can see it, that major anchor, all right, from, let's even get rid of it, and I'll just redraw it myself. Matter of fact, I have it saved, don't need to redraw it. Make it clearer. I got that set. Nope, no, I don't. Unbelievable. I think this one. All right. From that flag, all right, from those lows, the most lowest lows, which was printed on June 28th, drawing from there up, which broke here. So therefore, I would not use this low again, and I would now use from here up, still holding 58.75 is invalid. All right, so pretty much 59.34. I'm going to be looking as that as the buy area yet again. All right, and right now oil, I have a very small long position, very small. All right, pretty much I trimmed everything that I had brought on these 2 days. I trimmed, not yesterday, the day before. All right, and pretty much I told you that everything that I had brought, I flattened. All right, and now pretty much I'm just looking for support. And we sort of knew yesterday that it wasn't going to be yesterday, only because going back to now the euro. Real quick, let's see again. Let's take that up here, and still ES defending. Euro, still same thing. It'll run up in extensions and just pretty much fail, right? But it's still higher highs, higher lows, right? So it still has targets up above. None of them were filled, and waiting for the euro to trade these 111.36s. On the oil, dollar-denominated assets will not start moving until the euro trade support. Until the euro trade support, nothing else will go to trend movements, meaning that the trend is to the upside. Oil will not, it'll be sloppy on the shorts, yet it will not start trending higher until the euro trades its support. Once the euro gets down to these 111.36s, then you'll see oil pretty much at or near a bottom, and we'll be starting to put its whatever leg up. If that leg manifests into continuation, remains to be seen, but at the same time, it'll be viable at minimum. All right, so that's the only reason. If the euro is at support, then I'll be looking to add into everything else and then work into a position, or should I say trade into a position. All right, so pretty much euro, I want to give it all the room it needs down. I'm not sure if we're drawing to the June highs or to the June 18th highs. All right, there's two highs in June, either the first or the last. I'm not sure which one it is. The only way we will find out which one it is when they trade, and then we break a short, and then you buy pullbacks. All right, but pretty much if you relied on just this first one or the second one, you run the risk of getting shaken up, and you definitely don't want that to happen. All right, so just be careful. I have limit orders sitting. All of this down, right? I don't get stopped out until under 109. 109. 110.35. All right. So and mind you, I've been in the euro since well down here. All right. I was shorting into this crap, and I got stopped out over here, and I had to reevaluate. And yes, I brought pullbacks. So it is what it is. But the euro's been when it moves, it's phenomenal. All right. Yes, defending, and I know I am good right now. I just got it. Wow. Okay. I'm underwater on the TS. About 86s. Motherfucker. All right. Last thing, and this is a freebie because I usually don't do it so often, but I hear a lot of chatter about Apple, so I'm gonna give you my opinion. All right. Apple. This is a daily chart. All right. Mine will be, matter of fact, I'm going to step out to a weekly so you can see it better. I'm going to take away this volume. All right. Apple usually does measured moves. They'll give you one or two and then go straight up an extension. All right. An extension, the difference between an extension and a measured move, meaning that you'll have a move from lows to highs. A traditional meaning that you're measuring from low to high. All right. Do you see how this is the profit target? And this just rips from it. That rip just told you that you're doing something abnormal, and that's caused an extension. You're moving well too far away from that profit target. So once that happens, you know to draw from, instead of low to high, you're going to draw high to high. All right. This first one, I may not be measuring it correctly, but it gave you one rip and then failed. So then right from there, you have to sort of figure out where they're drawing from. And probably low to high. Yep. Pretty much the extension failed, but it pretty much just pulled back in from a low to a high. Came halfway back. And then went to profit target. All right. Let me just make you aware, stocks, ETFs, anything that's pretty much not futures related, you have to give it a little bit more room to sometimes it will break, but defend it's not as perfect to the tick as futures. So just want to make you a little aware of that. You'll see sometimes things will break, but yet again it will defend. All right, so you got to use your trading abilities and your common sense and I guess your intuition to really uh, gauge participation. But for the most part, it works, but it's just rather sloppy. All right, so just be mindful. All right, from here you just started extensions. I believe we went from highs, and mind you, what year this is? This is 2007. This is a key year. This is also when the indices broke out of it would appear that most of them were in double tops. All right, so right from there, if you know the indices, they straight up ran an extension. Apple probably did the same thing. One, uh, then I believe if you try to, from there you had one measured move and straight up an extension. One, then another measured move, and then another measured move, which has not traded yet. All right. I just want to make you aware before we really look at this next measured move that from this high, all right, too high, similar to what again these indexes are doing with the 2007 extension, all right. This profit target, do you see it? It's 122.01. I just want to remind you what the ES is doing, all right, with its profit target, 2007 to there. All right, I just want to show you what the ES is doing itself. It's going straight sideways at its profit target. Yeah, it did go over it, but it really hasn't gone anywhere from it. And if anything, we have been more trading the upward part than the lower part, meaning that for you profile traders, I'm pretty sure it'll look more like a P. All right, if you are putting enough data there, this is a P. All right, and it usually has a tendency once we go to the bottom of the range, you just have a whole bunch of single prints up and short covering. All right, and then more just upward area consolidation and distributed. You're not going to. The only way to say distribution is in hindsight, but pretty much this is what's happening. All right, they're selling. All right, so going back to Apple, again, same thing. You don't think big money is selling this to you? All right, don't get me wrong. The only way for that to be invalid is Apple has to go higher. Has another target up above 141. At 141 is gotten from 2012 highs to these new all-time highs, right? That also gives us, however, it gives us support levels at the 117s, right? Remember this adage? You gotta go down in order to go back up, right? And that phrase works both ways. You gotta short squeeze in order to go back down. You gotta dip in order to rip. All right. So these phrases that you'll find different people saying these different uh, key themes or forgive me, I'm not a scholar. I don't have these correct ways to say these at the rolling at the tip of my tongue, but I believe you understand what I mean, meaning that these phrases that are said, or key things or rules to live by, they're said for a reason, right? And you start to put all these things together. However, this is major support for Apple because if that breaks, what do you wind up doing? Let's go back. Wow. I don't want to make too many inferences, but then I will go from the 2007 highs, just like the equities, from these 29s. I don't know whether to measure from top to high, but just to say you do both. All right. Apple has a pullback coming the same way the ES has come in into these 1800s. And excuse me, this needs to be redrawn from this low now to highs of 2134s. All right, whatever. It's not correct. I drew it to 35s, but the ES is coming back down to the 1860s. All right. All right. And I'm already probably booking some right now, too. Give me a second. All right. Sorry about that. Forgive me. All right, and that's pretty much. Let's go back to Apple one more time. I just want to show you where we're at now, right now. Go back into this daily chart. All right, so you pretty much know we're here. All right, and this already had broken this last extension up here, but then you do have. Let me just erase this one so you can see this clearly. You do have another measured move at lookalikes, but that has not traded. And I would say this is major support at the 115s. This one already broke. All right, you can see that. Let's get rid of this one now one more time. You can see there was participation, right? Meaning that somebody tried to buy it up. They tried. They was defending it, but then it broke. All right, so this is telling you is a warning sign right here. All right, that's shots fired. Pay attention. All right. Now, where are we at now? When you had first broke, I believe it was, geez, I should have just kept it on, right? Sometimes I waste so much time myself. From here to here, when you broke this candle, right, and you rally back up. Damn, I have this written down. All right, it all comes out to this candle over here, though. What tells the story as this breaking, this had set it up a short when it had broke. And this was better shown in the candle that's shown right from the bottom of here. No, I got that wrong. Yes, from top to bottom, actually. Top to bottom, and then you went straight down. Where was you? Where were you? It was somewhere in the midst of here. And I'm sorry, I should have had this labeled, so I don't want to waste time. But pretty much it gave you an aha short, right? It was like an original level, and it was pretty much somewhere here. It was actually a little bit more down, right? But this is showing you that this is a level that once you see that it trades and it doesn't, like you see how this dips in, all right? This traded, it actually traded perfectly, and this one slight touch. Once you start seeing it getting less and start fading, you start to assume that this level traded. right? But this is showing you where the level where the algorithms are attached at somehow. But at the same time, you already had one measured move that held. And this spike up yesterday that everybody got so proud in with Apple, that the market was red and Apple's green. Well, let me just tell you, these markets, a lot of people use the word rigged. Well, they all tell their own individual story, but while the market was red and everybody was, looking at Apple being green, that was the day to sell Apple. And if this market gaps up, which I think it is for the most part, it's gonna probably stay gapped up, probably start selling. We'll see. Look, yeah, it already started bleeding. All right. Um, if all right, forget about the market, but if Apple gaps up into this area, you better short it. Short it and put a stop somewhere up above it. Don't try to put it up at 130.16. You'll get stopped out. All right, but find a good spot that you feel comfortable with and sell it and walk away from it. All right. I don't advise options. I'm terrible with it. I have options that are going to expire soon, and equity index options, and let me tell you, they're bloody dead. All right. I'm terrible with options. I can trade. I just that's my soft spot, my weak spot. Right. Anyways, if you don't know what you're doing with the options game, stay away from it. That's my best advice to it. However, again, just a real quick touch up, Apple, you just got sold. So if you're buying green and selling red, you're smoking something that you shouldn't be smoking. Right? Trade safe and let's see what this future holds for us. Take care.